It certainly will repair the balance sheet if they hold Bitcoin. We all know that it will. And the second thing is we know that they're going to do it. They're going to try to do it. So Bitcoin at about 1.2 trillion is still larger than sterling, which is about $1.1 trillion. We passed the Bank of England. Lending the Bitcoin at any interest rate right now, it's definitely not worth it. In the face of a debt crisis, stablecoin demand for US treasuries could be a way to. 6 years ago, Bitcoin was a couple $1,000. And the monetary base was under $20 trillion. And now Bitcoin is $60,000 and the monetary base is.
This rip of TFTC was brought to you by River. It's the best place to buy Bitcoin. Go to river.com/TFTC and enjoy this episode.
The button has been hit. Last day of recording from the back porch here in South Jersey. And the weather has hit us with what seems to be the beginnings of a nor'easter. I don't know what this is, but there's a lot of wind. Bear with me, freaks. We are streaming, I hope so, on Zap.stream. We are live on Zap.stream. First Nostr live stream of TFTC's history. So thank you guys for joining us. We're here for Monetary Base Update with Matthew Mežinskis. I had the pleasure of being in person with this fine gentleman across the world from me last week. Baltic Honey Badger recap, your perspective. My favorite conference, fourth time there. I fucking love Riga, Latvia.
Great to see you there, man. Absolutely. Inspiring weekend as always. High signal and just no bullshit. It was great. Loved seeing you there. What were your impressions fourth time back to Riga? Anything changed since 2018?
No, just people are more familiar with the crowd there. It's like catching up with old friends now. I love old Riga, walking around. That's where I stayed again this year. It's just a beautiful city. Had the pleasure of experiencing a traditional Latvian sauna the Thursday before the conference. That was an experience.
How'd you like it?
I liked it. I mean, they beat the crap out of you, but it did feel good afterwards. So it was a good experience.
Yeah, it's great, man. No, I mean, I love it. It's just great to have the honey badger always come back to my neck of the woods. And, we talked a little bit about it, but I mean, the people, just young people here in Latvia and in the Baltics, just continually getting inspired by Bitcoin and FOSS stuff. And I think it's fantastic. I mean, it's a big change if you juxtapose it with some of these slower, older grain economies of the Western world. Eastern Europe is just hustling and bustling, man. So it's really great. It's great to have the conference come there. I was inspired.
Yeah. And Max and Anna do a really good job of curating the content in terms of Bitcoin conferences around the world that I've been to. I think that's the most high signal, most critical. Like, what are we doing here? What are we building? Mixing in the economics with the technical. And I don't know, I always feel reinvigorated walking away from Riga. Though the travel's long, I was jet lagged there, and then I was jet lagged here. But I feel like I'm fully caught up now. I've had three nights in a row of 9 hours sleep, which has been good.
Oh, good for you. That's lovely. But you've been active with the kids?
Active with the kids, yes.
Enjoying the summer by the beach, Jersey Shore?
Yeah, we went to a bayfront water park yesterday, and I was launching kids into the bay. It was fun. Have to reconnect with your inner kid every once in a while.
I love it, dude. You were showing me pictures of the fam playing around this summer. You just look like the typical Irish dad that I remember from my childhood. Just active and with the polo shirt and the trucker hat, just running around. It was great.
Throwing kids around.
Happy for you.
Well, I'm happy for all of us. We're here. Where should we jump in on this episode? You've only released the update on Nostr right now, correct?
Yep. It's just on Nostr. Another thing I was inspired by in Riga, I just said, I've been on there for a while, but I haven't been posting too much. And I was like, I need to get to the full long form content of this, of these charts and the research, and what better place to do it than, Nostr and Highlighter and Primal and everything. So that's where I am. And, we'll see. Maybe I'll get it to Twitter whenever I get it there. But yeah, it's update number 25, Marty. So it's been 6 full years, starting the 7th full year, 25 quarterly updates, which is pretty wild. You know, when we started 6 years ago, Bitcoin was obviously a couple $1,000, and the monetary base was under $20 trillion. And now Bitcoin is $60,000, and the monetary base is $26 trillion, down from $30 trillion in the just start of 2022, post-COVID money splurge. So things have changed, but it's not slowing down. And did a couple different things. I think it might be interesting to look at. I looked at, a lot of different assets this time, like stocks, bonds, population, GDP, the global increase of gold, silver. And I just wanted to show them to the reader on like a sort of global, like what's the trend line. We've talked about the power trend lately. That's got some attention lately. That's fine. But most stuff in finance, economics is on an exponential curve, basically due to compound interest, right? So that's just means constant growth, exponential growth. That means the same percent continually compounding year in and year out. And for example, if you have something like 10% compound growth, it doesn't double in 10 years. It's the rule of 72. It will double in 7.2 years. So take 72 divided by the 10 minus a percent sign, you will get 7.2 years. So that's kind of the brass tacks of always how I've tried to look at it. Don't bother with CPI indices or PPI indices. I think there's a lot of noise there. Just look at how much money is actually be printing. What's the size of it, and what's the relationship of Bitcoin to that? So we're basically the same as we were at the end of last quarter as far as size. We were the big one last quarter is we passed. You may recall that we passed the Bank of England, the balance sheet of the Bank of England. So we passed the oldest fiat currency in the world, the sterling. So Bitcoin at about 1.2 trillion is still larger than sterling, which is about $1.1 trillion equivalent. And, marching on. So I can show you that if you want to see the actual chart. Here we go. Thank you, Logan. So this is just this is the curve. You've seen it a lot if you've been following my stuff, right? We topped out at about 30 trillion, a little over 30 trillion at the end of 2021, start of 2022. And then we've fallen all the way down to 26 trillion in 2024. But it's an interesting phenomenon here, and I'm trying to quantify it differently. It's kind of like a Wittgenstein's ruler thing. But, we've fallen 4 trillion. But if I asked you, and I've mentioned this before, so, I like to give these little quizzes, right? If I asked you, does that mean that banks are on balance printing something like, 10% less money, right, a year, or 5% even, would you say true or false, right? Because we're down over 10%, right, from 30 trillion in 2 years. So does that mean that 6-7% per year banks are printing less, or something else? I'm leading you into that question.
Yeah, it feels like a trick question. I'm going to say it would seem that they are, but I feel like there's a gotcha to this.
The gotcha is very interesting. They're still they're flat, and I'll show you in a second. But really, what you're seeing here, this decrease down from 30 trillion is other. This is Wittgenstein's ruler, right? We can't orient ourselves because there's 50 different currencies in this data set. What this really is, this 26 trillion less now versus 30 trillion in 2022. What's really happening is all other currencies are losing value against the dollar, but they're flat, or in some cases even printing more units. Follow that? So they're still printing. Yes. Yeah. So that's an interesting thing. Now some of them are decreasing. We know the Fed is decreasing its balance sheet. It got almost to 9 trillion. Now it's at 7 and change. So the big ones, they are down. But overall, it's not necessarily like major decreases. So I'll show you that now here. And my greens may be wrong for this chart actually, but so this is like a rolling 12-month thing. So again, you would think that we'd at least be at a rolling negative 10% here per year, being at 30 trillion in 2022 to being at 26 trillion now. But you see, and I'll zoom in, you see the negative numbers, right? These are rolling trailing 12 months, these bars. They're just barely negative 2% here in the end of 2022, and then we went positive start of 2023, and now we were negative 1.4% in May 2024. Now we're negative 0.3% in 2024. So that's very interesting. So just to be clear, what these numbers I'm recording are, this is like, there are a couple different ways to do this, but as I'm doing it, as I've done it for 6 years, is you're taking each monthly growth of each currency. So you have dollars going up, monetary base of euro, yen, all the different central banks are printing or not printing. They could be removing some money, right? And then you weight that by the size of the those monetary bases themselves, of course. But how do we weight that? We have to put in exchange rates there. We have to look at the dollar value of those. But I'm only looking at month by month. So 1 month, if it goes up, blended 2%, it's that, then it's completely. Got my Apple fireworks going there, I think.
We can't see it on the screen now, but
from my hand gestures. Okay. Anyway, point is, it's a month by month thing, and it just resets every month, right? And then I count it over the prior 12 months to give you this number. So it's very interesting that basically you would think from 30 trillion in 2022 down to 26 trillion now, you would see some very big negative numbers when they're not printing as much. And it's true, they have cut back. But overall, it's way less than it might seem if you just look at the dollar figure. So again, zooming in, when peak COVID was happening year on year, right? October, November, December 2020 into February 2021, March, we went up blended 33%, all currencies. Okay. And that translated into 29 trillion divided by 20 trillion. Okay. And that actually looks pretty close to the difference there, right? I mean, I can tell you exactly. Let's catch it. Let's do the example. So March 2021, it's 29.11 trillion divided by March 2020, it's 21.16 trillion minus 1. That's 37%. Okay, 37%. If you just take the gross dollar value, you follow? 29 divided by 21 trillion. But then my trailing 12-monther that I find is 32.3%. So it's pretty close. Slightly different, but it's pretty close. But what these green bars are they're very, like, in my opinion, like as rigorous as I can be with something that's nebulous, like 50 different currencies. I'm taking each individual unit, counting them up. What are those rates of growth? And then weighting that weight by the entire basket. So that's how you do it. So it's interesting that on the way up is pretty close, right? My method versus the actual dollar increase. But on the way down, as I've talked about a couple times now, just the dollar value collapses for so many of these currencies. And that's because, but the rate of decrease of the money supply doesn't necessarily collapse. As you can see, it's still like flat to zero, these bars here, right? It's like negative 1.4% at the end of the end of last quarter is negative 0.3% year-on-year growth, TTM growth. So again, to be clear, what that is saying, what that's interesting is that they're still printing, or they're kind of flat, they're flat basically. And they've been that way on and off for 2 years. But because so many currencies have just collapsed in value of the dollar, visually, the best I can show you this by counting them up is that we lost, the monetary base has shed $4 trillion in value. But they are still, like, they did not shed 10% per year or 10% over 2 years, a little bit more than that, right? Of their balance sheets. They're more or less flat, a little bit down. So that's pretty interesting, in my opinion. Shows you that getting closer to the end game or something, because those currencies just are losing value massively against the dollar. And it's just getting wild. I mean, just look at this chart. So anyway, if you want to take all the noise away, the number that doesn't really change, that's been this way almost since I've been starting this, right? Sometimes it's been closer to 13%, sometimes it's been closer to 12%. But this black line, that's if you take a weighted average of the entire series, of the entire 50 plus years. And that's 12.7% compounded, or a little over 1% per month. And even with that, like, you can look at, what they used to call stable central banking, right? Back before Y2K. And even Y2K, that bump, that's because precisely of Y2K. People were afraid of Y2K. That's why cash balance just spiked up here in 2000. But then obviously, you had, they tried to raise rates after they printed a lot after the dot-com 9/11 tandem. And then the global financial crisis came and they just printed a lot. QE1 is here, 2, 3, just massive amounts of year-on-year printing, right? Like, as you see there, the second item in my tooltip, 30% May 2009 over May 2008, 32% July, 31% August over August 2008. Massive amounts of printing. Then they try to normalize it even before COVID. And then they had to explode it again. So the point is, if you just look at this 50 plus year chart, you can see, okay, for the first 25, 30 years, it's kind of hovering around this 12%. And then it's just much more sporadic and wild in the prior 25 years, which I thought was interesting if you just kind of compare what's happened over the last 2 years with that. Again, like I said, 30 trillion 2 years ago to now 26 trillion now. So it's Wittgenstein's ruler. It's hard to do like a global blended way, but I've had this method for 6 years, and I think it's pretty close. It's pretty interesting. Also, this method works, like, for example, I don't have China's data in the first 30 years. It's definitely there. Someone speaks Chinese and can find People's Bank of China balance sheet from before 2000. Please let me know. They only started publishing in, I think, December of 99. But, so my method, obviously, if someone's not in the basket, they're just not in the basket. But that's a little bit of how this works. And just find it interesting that, we are $4 trillion left. It almost seems like they're really trying to normalize. If you look at the gross dollars here, dollar value of the base money, liquidity in the central bank system. But like I said, what that really means, if you look at units upon units, like euros upon euros, yen upon yen, so on and so forth, and you weight that, you're kind of just flat weighted. And now, as we've heard from Jackson Hole, Powell is signaling he's ready to drop rates again, which means print money.
Yeah, and I think that's what's most surprising about the end of this chart. Is we've had 2.5 years of aggressive posturing, particularly from the Fed, hiking rates at a pace that they have not done in quite some time, and really trying to beat the drum like we're going to pull money out of the system to quell inflation. But it seems like would you consider the data that you just presented like proof that not as effective as they would have liked it to been?
Yeah. Or just for as much as they talked about fighting inflation and getting things back to normal, it really wasn't that much. Let's just go through it, right? I mean, 2022 into 2023, it was down. We're looking at the second item in the tooltip, right? Those bars. So they pulled it down like 2%, 2.3%, 1.4%. Okay, so on a trailing 12-month basis, they were pulling it down a little bit globally. Again, that's not reflected in the gross dollar value falling because all those currencies were getting weaker simultaneously against the dollar. But then they already increased it again globally by the end of 23, up a couple percent, and now just a little bit down. So basically flat. I mean, all that they've talked, this is a global take, right? This is a worldwide take. So as much as the Federal Reserve might have been saying, well, we worked hard and we quelled inflation and we, took interest rates above 5%, so on and so forth. In reality, the world has kind of It's been too difficult for the rest of the world to do that. And you can just look at this chart. Look at what is below zero on this chart generally. It's not often. It happened once when they were, when they had the repo spike in September of 2019 before COVID. It happened like 1 month in December 2000, year on year, 0%. You see, like negative 0.0, rounded to basically zero. Money growth. And then just these last couple years, been the only time that money growth has been negative. And so, I would say not only is it not indicative of like perhaps being effective, like you said, I would just say you just kind of gotta look at what they do versus what they say. That's what I'm trying to get with a lot of this stuff. And what they do has been, they've been hiking it. They know that they got crazy after COVID. You can see it going 30% plus year on year for many, many months in a row. But now it's flat, and they're all, even the big banks are signaling that they're going to drop rates again, which means print money again. So not effective and fuel to the fire, I think, for what's to come.
This episode was presented by River. River is the best, most secure place to buy Bitcoin in the United States. Go to river.com/TFTC, set up an account today. You'll be able to DCA into Bitcoin without paying any fees. You'll be able to give people Bitcoin via River links. You'll be able to send and receive Bitcoin over the Lightning Network, and you'll be able to set limit orders. If you want to buy Bitcoin at a particular price below or above where it is now, you can set orders to buy Bitcoin when it hits that price. Go to river.com/TFTC and set up your account today. This episode of TFTC was also brought to you by Bitkey. Bitkey is Bitcoin made easy to use and hard to lose. If you're a hardcore Bitcoiner out there with friends and family members who have not gotten their Bitcoin off exchanges because they're worried about the complexity of hardware wallets, seed phrase backups, this is why Bitkey exists. Bitkey is collaborative custody. You have a ergonomic hardware device with biometric confirmation. You have the Bitkey app with a key in it, and then block holds another key in the server. This doesn't come with any seed phrase backups that people have to secure. You have social backup. It's a beautiful solution. If you're worried about the people in your life that aren't as advanced as you in terms of Bitcoin hardware and being able to set that up and secure it, Bitkey is a great first step. So tell them to get a Bitkey. Go to bitkey.world. Use the code TFTC20 at checkout, and they'll get 20% off their first Bitkey.
Well, that begs the question, how aggressive is the money printing going to be on the back end of this? Because we look at inflation, despite the fact that CPI would have you believe that it is somewhat closer to the 2% target. People do not feel that at the grocery store, at the gas station, when they're buying insurance, in the housing market. It is really windy here, freaks. I'm sorry if it's distracting, but the show must go on. You look at commercial real estate, seems to be rolling over. Their jobs reports, they overreported by 1 million jobs this year. The jobs market is not as strong as they were positioning. Props are due. They did revise GDP, Q2 GDP higher to 3%. So it seems like GDP may be higher, but haven't dove into the intricacies of that print and how that can be manipulated. But it seems like, was this rate hike regime successful in any way in your mind? And whether or not it was successful, like what do you think lays ahead of us with Powell now explicitly saying that they're going to pivot next month?
Right. I think it was par for the course in the context of this new normal that we're in. That new normal being this just crazy peaks and troughs and spikes that I showed you in the last 25 years. It's par for the course of the new normal, and it's going to continue. Obviously, more aggressive than they would like you to believe. But as for the rest, and actually, I could show you GDP because I showed this one on the on the exhibit as well. So here's GDP over like 200 years of the U.S. It's an exponential growth, and it's exponential because if you put it on log scale, it's a straight line, right? Okay. So here's the Great Depression, fell way below the all-time trend here. after October 1929. And then, interestingly, if you look at the growth of the 80s in particular, and then into the internet age, you see that we're up at the top end of this trend. So we actually are above trend. And I don't trade this. I'm not saying that this is like gospel or something. Maybe someone can go back and find some more interesting data. And it looks like I have no idea why it's like above trend, right? On in the early 1800s. I mean, the United States wasn't that great, and they had a lot of national debt at that point. But whatever. In any event, the all-time trend is if you did the if you measured the slope of this curve, okay, the all-time trend of GDP is, and I'm not showing it here, but it is 5%. So that's the just all-time slope of this black line per year, 5% per year. And you see that on a dollar basis, 28 trillion and change ending June, where the trend line is only 17 trillion. So again, this, depending on how much data you take, the trend line's not really important here. It's just to show you really the growth rate. And yeah, I think some of it is manipulated, some of it's inflation, and some of it is the internet. Because you see it that after the last 25 years, basically, it's always kind of at a higher level than what it has been in the past. So this is like GDP is just as you know, and I've talked about a lot. It's just nothing to really get that excited about. It's always going to go up as long as we're in this fiat system. They're going to print to make it go up. It goes up at 5% per year, and as far as I'm concerned, like that is that.
Yeah. The so how's Bitcoin faring in all this? Q2 2024, pulling up the year-to-date chart, looks like it's pretty flat. Maybe flat to down. March 30th, we were at 71,000, ended the quarter. June 30th, around 50 or 60,000, like right around. So we fell through Q2. How did that affect Bitcoin standing in the global monetary base?
It's the same. Still at 1.2 trillion is still, like I mentioned, it's above the pound sterling. Pound sterling is about 1.1 trillion at the moment. And for all of this, by the way, you can see it on the Nostr post. The last chart, I have the full breakdown of all the 50 currencies that I review, central bank data. And for those that are just tuning in, never heard of the monetary base before, don't know what the hell it is. It's just the cash that the central banks print, like physical cash that notes and coins. In the United States, it's different. If you're paying attention, the Treasury still strikes the coins, but that's a historical thing. So it's the notes and coins in society, and as well as the bank reserve account, which is basically the fiat sort of main account of each bank at the central bank. So it literally is the printing press. That's what the monetary base is. That's why it's comparable to Bitcoin. That's why we do this. So it's still the same. It's number 6. But this one we have here, I've shown you variations of this chart before. So this is price, right? And here's the power trend price. So unlike all the other things, and there's more exhibits like gold, silver, stocks, bonds, I talk about that as well in this update. Those all are straight lines on log scale. But with Bitcoin, it's this sort of gradual, asymptotic kind of slightly decaying curve. And people may think, oh, how can it decay and all this? And we've talked about this before. Like sailors talk about, all your models will be destroyed, which is fine. I'm happy for this model to be destroyed for the upside. Although it's funny, in one of his recent conferences, he as well put some per year return figures for Bitcoin, and they were like more conservative than what I have from what I recall. So that's also funny. But in any event, here is the price on this curve. So 96% R squared is pretty solid. I've already been looking at this for like 2 years. I first posted about this 6 years ago, actually. So it's been following this curve the whole time. We'll see where it goes. But you can also look at the returns. And this unfortunately, I dated this a couple days, about a week ago. I didn't have time to update it, but it doesn't matter. It's not going to change really. The price is still around the same. So what if we reverse this, and instead of looking at The price, we wanted to look at actually, okay, say you bought Bitcoin here at June 16th, 2011 and held until today, and today being a week ago, $59,000 Bitcoin. What would it look like? It would look like here. Okay, now, rather than say like I bought Bitcoin in 2011, got a 50,000% return or 100,000% return or whatever it is, it's easier if you can put it into this, as I mentioned, this compound return or like an annualized return. And this is like as scientific as it would be. This is, if you held till today, and when I say today, I mean $59,000 Bitcoin a week ago, takes into account time, takes into account number of days, and you bought, say, at this peak, June 2011, $35 Bitcoin, you would have a 75.5% compound return. That's an enormous return, like just mammoth. That means per year. So you bought it. So if you take $35 and you multiply it by 1.75.5 for a year, and then another year and another year, all the way until today, you're going to get Bitcoin's price. That's how this calculation works. So this is actually kind of like how you would do a bond yield calculation and things like that. You can do it for Bitcoin; it's not a problem. And this is the return. Now you notice it gets a little wild here. The compound. It's kind of like the reverse of options. Options get less volatile as you get to the theta, as you get to the expiration. Here, when you get closer to, as we're annualizing, as you get closer to today, that they get a little bit more volatile. So I don't take all of the data into account. I stop like 1 month before today, or 1 month before August 21st in this chart. But basically, imagine now if we want to smooth this out and understand where this is going, we can put a trend line on that. And how would that trend line be? Well, it would simply be measuring this, doing the same calculation, but measuring these returns on the trend line, on this black trend line. And if you do that, then you get this nice trend line here. So I'll take off the actual price, just the actual power trend price, just to see and just to show you. So here, if we go back again to 2011, so you bought at the peak, June 10th, $35 Bitcoin, 75% return because you were over trend. I'm not showing the trend. I guess I should put it back on for my example. There's the trend. Trend price is $1.64. Okay, but Bitcoin in June 2011 had one of the first booms, and I think around this day it was the first MT-GOX hack as well, although it might have not been known at the time by Karpelis. But anyway, $35 price. The trend line price back at that time was $1.64. So if you had bought at the trend line price and held till today, you would have 126%, as it says. But if you bought at the actual price, you have 75%. Both are enormous returns, but that's how it works. And then if you just smooth this out, look at the times that you bought above trend. Look at the times here, for example, in the crypto winter, if you had bought below trend, or again in 2019 or during COVID, below trend. As then look at the green arrow there, sorry, the green dotted line, and you'll see that your returns are above or under trend. So now we can smooth that out and see really where Bitcoin's been. Clearly this, not only does the price trend work, but also this return trend line, right? The last dotted line, which curves down. So if you were, Trace Mayer or Roger Ver or any of these guys buying back in 2011, right, around $1 per Bitcoin, and the actual price, early 2011 is about $1. Also, trendline price was about $1. That's 126% per year, still to this day. That's what it is. 126%, 130% per year. And then it falls, but you'd be surprised how little it actually falls. If you go all the way until today, yes, it's lower, but it's still big, and you can still get larger returns, right? People think you need to like ape into shitcoins or something to get returns. If you bought Bitcoin here, when Peter Zion was on Joe Rogan saying it was 17,000 overvalued when it was 16,000, your actual compound growth buying Bitcoin in December 2022 was 111%. Still, right to this day, 16,800 then, 60,000 now. So, you can certainly make returns. Obviously, never financial advice, but you can much more easily look at the dips here and see when it is to buy like under trend rather than over trend, in my opinion. I think generally people agree with that, right? So you can have huge returns still on a compound basis. Look at the, if you bought under trend here in September 2023, a year ago, you'd have 136% return per year, right? Because Bitcoin was 27,000 then. So that's how this looks. And then if you smooth it out with the compound curve, you get to today, about at 45%. That is what Bitcoin runs at. And then if you're running, well, how does this chart even like stay at 40? What if I go out a day? What does that matter? Well, and again, this is a week ago, mind you. But if we look at the trend line, actually, it doesn't matter if it's a week ago or not. But from this point, if we look at today, August 30th, $59,508 Bitcoin, and then tomorrow, but the trend line is 78,823, right? 78,823, and tomorrow the trend line is 78,903. 903. Okay, so that is a $80 increase. That $80 increase is what translates into this 45% per year. That's why you might be wondering, how can this still be 45%? It's just measuring the growth of the curve. So something to pay attention to. Again, through all the noise, through all the nonsense, the trend line is increasing $80 a day. And as a bonus, we are well under trend. We're 20 grand under trend. But if you're on trend, the trend line increases $20 a day, or $80 a day. That translates into a 45% compound annual growth. And you pull that out all the way to the end of the decade, you're still at 36.4% per year. So bottom line, still enormous opportunity, enormous returns, and, distributed money that's permissionless. So from a sort of macro big picture where Bitcoin is, I think that it still looks very good, even though it is the fifth largest. If you compare it to fiat money, it's the fifth largest, and if you add gold in, it's the sixth largest.
No, this is really good data, because we've been talking about this a lot at 1031 with portfolio companies, and I'm sure you saw Grant's presentation in Riga about Sats flow and how we make investment decisions, and then not only us, Bitcoin as our hurdle rate, and the portfolio companies when they're making decisions about should they hire, should they invest in R&D, like what should the hurdle rate in their mind be, and it is that CAGR of Bitcoin over the long term. So having this historical data is actually very valuable, because ourselves and others within the portfolio actually have a higher CAGR, like anywhere from 55 to 65%. So actually honing in on what it is historically, and yes, you may be above or below the historical trend at any given point in time, but having this data as something to reference when you're running a business and trying to outperform Bitcoin as a benchmark, like this is very valuable.
Yeah, and indeed, Bitcoin is the benchmark. This is the benchmark, and right now it's running at 45% per year. And by the way, we're 20K under trend, so that should be viewed as a benefit to people that want to get in. I mean, that means it's going to be more once it gets back to trend, quite a bit more, right? It's running at 45% per year on trend, and by the way, we're 20K under the trend.
Well, this actually brings up a good point too, because historically, before, Bitcoin launched in 2009, and you had essentially zero interest rate policy from 2009 to essentially you had that blip in 2018 to 2019, but post-COVID, going back to zero interest rate policy, and then 2022 with these rate hikes, Bitcoin for the longest time was like, it's a child of low interest rate policy. That's the only reason why the price has gone up. But maybe we should touch on, sir, I'm recording a podcast right now. I can't help. What do you think these last 2 years, from a narrative perspective, have meant for Bitcoin? The fact that it's gone up significantly, despite the fact that interest rates were jacked up to 5.5%.
Yeah, I can answer this directly with a chart, as you know I like to do, so I will. It's surprisingly converging on what is happening with money. So let me show you. Logan, can you pull this up? So now in red, I should have red bars for the other chart, but whatever. This is the same chart I showed you, right? This is the growth rate. All right, so on average, on really not even on average, a weighted compounded growth, very strong figure, 12.7% per year. That's how much money is printed, okay? 12.7% per year over the last 50 plus years. Base money that's comparable to Bitcoin. Goes up, goes down, as we talked about. Now, let's look at Bitcoin's market cap, as we talked about, number 6 in the world, including gold. Let's look at Bitcoin's market cap and see how that lines up with these increases or decreases in the money supply, in the fiat money supply. So I'm going to put that on in the bars here. I'm going to take off this. So this is interesting now. This is change in market cap of Bitcoin and greens. This is huge, obviously. It's different. First of all, notice that that my axis is 4 times higher. Okay, so you see on the left side is the base money growth rate. That's at 40%. It tops out. And on the right side, I have the Bitcoin market cap. It tops out as 160%. Okay, and it goes down to negative 10% Bitcoin or on base money side and negative 40% on Bitcoin side. So it's a multiple of 4. So keep that in mind. They're just so huge that I have to try to make this somewhat clear. I gotta cap the chart. But notice that for the first 2 major cycles, right, let's say the 2013 to 2017 and 2017 to 21, we were pretty much independent of base money. You see that base money would be growing here at whatever, 15% per year, 12% per year, just up and down. And by the way, they weren't even growing. The Fed was growing none at all here. That from 20, think about that. And a lot of Bitcoiners would be saying that all the central banks do is print money. And it is true, and globally, generally they do. But the Fed wasn't printing money from, say, mid-2014 all the way until COVID, essentially, until the repo crisis in September 2019. Nonetheless, you see that this money is being printed all the way in red here, sometimes high, QE 1, 2, 3, and then it starts to finally like taper out to that, negative or level rate by 2019. Now look at the change price of Bitcoin. This is a change in value of market cap. Okay. The value of the Bitcoin network, the growth of the Bitcoin network, like absolutely huge, right? I haven't been mentioning them, but I'm sure if you've been watching, dear viewer, you've been seeing 1,000% increases, right? All the time. And then when we go into the bears, okay, big decreases. It can go all the way up to like 70%. I think there was a 70% this one. Yeah, there was. I caught it and I lost it. Let's zoom in. There it was. January 2015, year on year. January 2015, Bitcoin's down 69.8%. So, and base money still being printed. So completely uncorrelated, completely unrelated. Same thing happened in the next boom run up 2017 all the way to 2021. Or I should say, let's say the bottom of the crypto bear, as they call it, the crypto winter till the start of the boom after COVID. So it's interesting that basically from this this repo crisis period, it almost started to line up. Bitcoin started to line up more with what the fiat central banks were doing. And they're still going crazy, and Bitcoin is even growing crazier. But now you can see here from into 2020, 2021, the peaks are lining up, and even the troughs are lining up. So the decrease in Bitcoin's value in 2022, amidst all those scams, lined up even with the decrease in the COVID money print amidst high inflation. And now Bitcoin's changing again, and it's already been changing over the last year. And there's a little bit of that money printing that happened at the start of this year and the end of last year from the central banks, as we see here, just a couple percent. Bitcoin up 165% at this point, February 2024. But this is an interesting question, and I wonder if we've actually made it. Like if this is already it. I mean, and by it I mean if this is like a full on. We were completely uncorrelated asset class before, but I wonder if now, they're going to start printing base money, and then Bitcoin's just going to start printing USD market cap value on top of that, because it's lined up. It started to line itself up in the last cycle.
So you're saying like historically it was uncorrelated, but in the last 4 years it's become more correlated? And
yeah.
If we are going into lower interest rate policy, monetary base expansion, could the upward price movement be pretty robust considering we've got this direct correlation now?
Yeah. It's perhaps too early to tell. And we know Bitcoin, or people expect at least Bitcoin's still on its 4-year cycle, a year after the halving, people think things really start to ramp up, so on and so forth. But I find this interesting. I hadn't really noticed it before. I haven't lined it up like this. I mean, people kind of think about it. They always think about, okay, central banks print, then Bitcoin's going to go higher. That's been the narrative. But really, that wasn't what was happening before. It was completely uncorrelated. They were always printing at steady rates before. But then because of all the craziness that happened just before COVID and then after COVID, it's lined up. And I think that's interesting because I can't see if it is not coincidental and it's just starting to become a major asset class that like major investors are sort of lining it up with their expectations of the way that the money supply works, then I don't see why that would decouple anytime soon. But we'll have to see.
Yeah, it's Bitcoin going through its maturation phase in its nascency. And not like that's actually bring up a good point too. That's talking about like 4-year cycles and will they continue? And I know we've touched on this a couple of episodes that we've recorded so far this year, but like how much of an impact do the ETFs have? Does Bitcoin as a corporate treasury asset gaining more and more traction have moving forward? Like if it becomes like a de facto fiduciary responsibility for corporate CFOs to incorporate Bitcoin as a treasury asset on their balance sheet, like how does that throw a wrench in all this, especially considering the fact that we've had the halving, 3.2125 Bitcoin being distributed every block now. We've got nation state adoption picking up. How do you see these cycles playing out with all this supply being taken off the market by all these new, bigger, well-capitalized actors in the world, throughout the world?
It's not locked in stone. Right? I mean, how much do you expect? You probably know this figure better than I do, but what do you think is locked up in real fiduciaries at the moment? BlackRock, the ETFs, let's even call the miners. Like when I say real, I mean like, active major corporate entities in the space. It's still not going to be more than a couple million coins, right?
Well, luckily we have a website that is tracking this, bitcointreasuries.net.
Yes.
So including we'll take out DeFi, smart contracts. So it's private companies, ETFs, and other funds, governments, and public companies all together. Right now, they're at about 2.4 million.
Yeah,
those four active.
So that's the question. Like I said, it's interesting to me that we're lining up this cycle. We're lining up with what the regular mainstream established legacy fiat monetary system is doing. We're lined up. But it's an open question that it would continue, and I would say certainly based on what the power trend does as well is that the 4-year cycle, the just Bitcoin as a system growing that way is stronger. It's stronger than what any of these jokers that.
Yeah, if we take out governments, which historically have been weaker hands, we're at like 1.8 million Bitcoin locked up in public companies, ETFs, and private companies.
So call it 2. I mean, even call it 2. That's 17.7. That's in long-term locked up. Certainly, it can affect the price if a whale decides to move some of that. We know there are big whales, right, that have huge amounts of coins, but I think Bitcoin's 4-year cycle is going to be stronger. I do, personally. I think it's going to be stronger than this for now. Any of these narratives, I think it's going to continue to do what it does.
You think it's stronger? Stronger in both directions, or do you think stronger upside, less pronounced crashes from the peak?
Let me rephrase it. When I say stronger, I mean it's possible that it could decouple again. with this, whatever the central bankers decide to do, they're, we talk about unrealized capital gains for people and just doing things that, in the regular legacy fiat world, they do. They don't think about long-term, low time preference type assets like Bitcoiners do. So I think it's possible that even though it looks like the money print is going up and down kind of the way that Bitcoin is, it's not guaranteed that will continue. Let me say it that way. And if one of them is going to continue, I'd say it's the Bitcoin cycle over whatever these jokers tend to do with their money printing.
Yeah.
I think it's going to be, time will tell here. At least for this halving, I think it's completely independent of whatever anybody does in any government.
Well, that's a good part of the conversation to focus on the jokers, what they're doing. I mean, we talked about treasury issuance earlier, but I think what's become more well known since the last time we talked is the auctions that are happening, the duration of the debt that's being issued. It seems like they've been heavily dependent on the front end of the curve, short-term bills over long-term bonds. And so you have the situation where that has had somewhat of an quantitative easing effect on the markets as well. So like stealth QE from the Treasury and not the Fed this time around. If you looked into that, there was a paper written about it a couple months ago, funnily enough, co-written by Nouriel Roubini, but I read it. It was pretty good. But it seems like with the Fed being steadfast and holding up rates higher and for longer, the Treasury decided that they needed to step in and sort of inject some liquidity into markets with these front-end loaded Treasury auctions over the last 2 years.
Yeah, I haven't read it, but I mean, I understand the concept, and that's clearly they're going to have to keep doing something to keep the interest there, and it's not envious of a Fed official's position at this point. It's just so they're in such a rock and a hard place. So, I don't necessarily think that we're going to find anything drastic here as far as it goes with Bitcoin over the next cycle. So it still doesn't lead me to believe that, let me say Bitcoin in relation to the legacy system, as I talked about, right? But, has anyone checked in on Austria lately, right? They have 100-year government bonds. And, maybe the US will go that route to just start expanding. We're so good that you're just going to have to take on our debt for 100 years. Maybe they think that'll drive the interest.
They'd have to wait for Fed funds rate to come back down towards zero to do that, right? Like that was the big knock on Trump. Like he should have issued a 100-year bond, or Yellen should have, during like COVID when it went back down to zero, and they just didn't take advantage of that.
Sure. Well, we saw a lot of that effect a year ago from the people that made the mistake of being in those types of instruments, right? Their values get hammered if you're buying some long bond locked in at 3% or 2% when rates are at 0%, and all of a sudden rates go to 4%. Like you're just absolutely effed. And we saw what happened. And then they have to offer these different liquidity facilities. They have to offer these different promises. It's just a game that, like I said, I'm not envious of the people that have to play that. But again, that's why we're in Bitcoin. I don't worry about it too much, honestly. I really don't, because we know that there's like a real escape hatch. There's real value there. The asset is just super global with Bitcoin. I mean, it's going to be, what did what did Trace Mayer used to call it? I think it's the risk-free rate. Like that's going to be the risk-free rate if we're gonna talk about lending markets and stuff. Is how much people are going to lend their Bitcoin, which by the way is way too high at the moment. Like I would never ever, maybe with the stuff that DebiFi is doing, I could borrow against Bitcoin at if it's pledged into a multi-sig wallet. That's interesting. But lending the Bitcoin at any interest rate right now, it's definitely not worth it, and it's not going to be. It's just it's too detached still from what the regular financial system is offering. So whether it's 3% 100-year Austrian bonds or 5% 1-year American bonds, what's the Treasury rate 10-year at right now? Regardless, I'm not interested, and I'm sure that you aren't either. So that just shows you how decoupled we still are from the markets. You know what I mean?
Yeah. But what would it take for you to get interested?
4.4. The 10, yeah. No, sorry. No, 3.8. Yeah. The one is 4.4. The 10 is 3.8. So it's quite inverted. Which again, it's just clown town. I mean, yeah,
well,
it's
that's the other crazy thing about this year too, is like because of the weaponization of the Treasury market and the fact that it's becoming obvious that we do not have our fiscal house in order here in the United States. Like demand for the long end of the curve specifically has been dog shit. Like you've had 10 and 30-year auctions with terrible results in the last couple of months alone. And again, they've been over-indexing on the short end of the curve. But even there, like you look into who's really driving demand for these auctions, like Tether is quickly climbing up the list of one of the biggest buyers of these bills. Because of the way they need to manage their liquid treasury for their stable coin. Like, what is the emergence of Tether into the treasury auctions? What does that represent in your mind?
An embarrassment. Just an absolute embarrassment for everyone involved. I mean, it's hilarious. I mean, these are the people that, they want to come after, right? These are the offshore, greedy, dirty, Eurodollar holders of their currency that they can't control. This is the people that they denigrate and hate, and I'm not, not a huge stablecoin guy regardless, but, I know that Bitcoin has its different Bitcoiners have their different opinions on that, depending on which part of the world you're talking about and how stable the local fiat currency is. Right. But regardless, I think it's all a joke. Like, Paul Ryan said on a Bloomberg article or Bloomberg interview, I guess, earlier this year, that it's possible that in the face of a debt crisis, stablecoin demand for U.S. treasuries could be a way to salvage that somehow and make, I just think it's remarkable that you're a politician talking about how demand for stablecoins in a new gray unregulated market, and you're going to bring that into the regulatory fold. Like that's going to be that's the future of your financial markets. Would you use to dominate for 100 years? It's just, it's a clown show. So I do, and this gets back into the strategic reserve, and then we can talk about that as well. I talked about the strategic reserve a little bit in relation to my Nazi gold speech that I gave at Honey Badger, because I was talking about how gold moved around Europe during World War II and how Hitler, like the first thing he did when he was invading a country was go to the central bank, say, let me have the keys to the vault, please. Because they needed to fund their genocide. They needed gold because the Reichsmark wasn't accepted around the rest of the world. It's kind of like the Russian ruble today, except Putin's so dumb. He maniacally dumb. He doesn't keep his international reserve shored up before he invades. But in any event, the point of that is you have an asset to this day that can move around very securely, multi-sig, multi-jurisdiction, multiple backup, that individuals can hold and corporates can hold and governments can hold. That's Bitcoin. It's clearly the best asset. It's clearly, whether you're an individual, whether you're a government. So from that side, I think it's inevitable that the U.S. actually, the main conversation soon will be about the strategic reserve for Bitcoin. My personal philosophical views on that would go back to the Nazi gold presentation, which again we can flesh out more if you want. Where I don't necessarily think it's great if it just goes into the hands of the Federal Reserve or the Treasury, some Bitcoin. I mean that's Bitcoin that's going to be forever locked up KYC Bitcoin, and you're just never going to see it again. They're going to do whatever they want to paper over it in the future. Having said that, I certainly see the value of a strategic Bitcoin reserve in that you have, and I wanted to actually show you this chart this time, Marty. We'll do it next time. I didn't have it ready. But if you looked at, how I always tell you that there's no assets on the, not the Fed now. We're not talking about the Fed. We're not talking about the money printer. We're talking about the Treasury. There's no assets on the Treasury's balance sheet. It's like the only entity in the world that doesn't have assets. So you have the debt, you have the national debt, which is 35 trillion. And then they have other liabilities. It's actually over 40 trillion. It's something like 45 trillion is the on-book liabilities of the United States Treasury. And on-book assets are something like 10 trillion. There's like a $35 trillion shortfall. Let me see if I can find it for you, actually. You there? You hear me?
Yeah, I'm here. We got wind and fire alarms going off, so I'm just on mute.
Yeah. Yep. I'll keep talking then for the listener here. Let me find the numbers, and then if I can find the chart, I might even be able to get it up, Logan. All right. So total, we're talking about the U.S. Treasury. This is a quick balance sheet on numbers. Let me just zoom in for you if you got this on the stream. Why is my menu not zooming in here? Forget it. Anyway, if you look here, we're at 42 and change. Logan, it's actually just too annoying to look at it this way. Let me pull out. So 42 and change is the Trez balance sheet. Yeah, this works. This is good enough. What I just showed you. So $42.8 trillion is the total liabilities of the United States Treasury. That's ending last year, September 23. That's fiscal year 2023. Total assets on the books are those three in the green there. You see, we have property, plant, and equipment. That literally is like land, like federal land that's usually out in the West. Some of it, confiscated from the Native Americans, some of it not, whatever. $1.6 trillion worth. You got direct investments and loans. This is just mostly fake money. It's investment in other schemes where the money's already been taxed, but they invest, they call it an investment, even though the money itself was already picked up and taxed. It's like one hand of the government owns the other hand's liabilities. It's just robbing Peter to pay Paul stuff. Anyway, that's 2.3 trillion. And then other assets, 528 billion. Just forget that. Bottom line, that cash and gold line, I have the last line there, cash and gold, 922 billion. That's the only hard money, hard asset as far as the balance sheet goes. But regardless, this red shaded area you see on this chart, this goes back to 1994. This is a linear chart. This is literally how the balance sheet is reported. There are no assets. People don't quite understand this. The total liabilities as of fiscal year last year, 42.9 trillion, and the total assets are less than 10 trillion. Look at that asset mismatch I have there, negative equity of 37 trillion. They're less than, it's like 5 trillion. I should have just put that on there, but I don't have it. 5 trillion in assets and only 922 billion in cash and gold, meaning some monetary gold, basically. And the hard assets is a percentage of the balance sheet, as you see there, which balance sheet is total liabilities. Here it's 6%. Last year, 2 years ago, 6.4%, 5.9%. So it's a little bit lower. Back in the early 90s, it was 23%, mid 90s. So it was higher then, but it quickly fell down to this number that is like, 6% of liabilities. This is what the Treasury is selling you every week, every month at these auctions. This is what you're buying. Inside of the national debt is this number.
The asset mismatch is 10x'd since 1996. That's insane.
Yeah, good way to look at. It was still a lot, right? So as a percentage, I'm actually surprised. I thought it was going to be much better as a percentage. You're still look at this, in 94, you're still 5 trillion in liabilities and $1.3 trillion in assets. So 4 trillion in negative equity. So it's still a huge number. And then here, you're 5 trillion. So let me just do that. 5 by 42.9. Yeah, it's something like 10%. Yeah, it's a 10% coverage of all assets, and all these assets are garbage, as I explained. The only asset that's not really garbage is gold. And the reason I brought this up is Bitcoin would go here. Okay, so Bitcoin would be another green item, orange item on the balance sheet. And I understand the argument. I think it's good. I think it makes sense. It's clear enough. Bitcoin would be the only way to repay any of this debt, right? But at the same time, like, look, we all know it's not like anybody here in the Clinton years or the Bush years or the Obama years was like, oh, we're going to wait for this moment where we have this great sound technology, this sound money, and we're going to buy it. And it's going to be our Louisiana Purchase moment, to use a catchphrase there. And it's going to repair our balance sheet. Like, no one thinks that way. That's not how the government operates. So I just don't have a lot of sympathy for this idea of a strategic reserve. And if you watch my Nazi gold presentation from Riga, you'll see that centralized Bitcoin, whether it's centralized Bitcoin or centralized gold, bad actors can come after it. It's better be in the hands of the people anyway. So those are my thoughts on that.
I agree with that, but let's jump into it. Like, yes, Clinton, Obama, Bush may not have been thinking about this, but now that it's here, and Cynthia Lummis and others are pushing it forth as the strategic asset, Donald Trump co-signed it. Who knows how much of that was pandering versus actual understanding of the potential of this type of policy. And going back to like the Nazi gold thing too, like, it is explicit in the Bitcoin Act that the keys to this reserve will be geographically distributed. Like, let's just have a
among how many Federal Reserve Board governors or Treasury.
Well, yeah. I mean, so let's go down to paths of different thought experiment. Like, one, like, if you were the architect of this strategic Bitcoin reserve, like, how would you do it to make it as robust as possible so that we don't fall into the same trap that many governments fell into in World War II with the Nazi gold seizures? Like,
right.
Let's think optimistic here. Like, in your mind, like, what would need to be done to build a reserve that could actually begin to eat in to that chart that you were just presenting?
To the debt. Let me give a positive disclaimer there. First of all, I think it certainly will repair the balance sheet if they hold Bitcoin. We all know that it will. And the second thing is, we know that they're going to do it. They're going to try to do it, whether it's Trump or Loomis or maybe even if there's a Democrat administration, that maybe they'll do it. Whatever. Eventually, they're going to do it, and nothing I or you say is going to stop that. It's too powerful of an asset. It's too neutral of an asset that, even though they might poo-poo it now, and even though they might sell some Silk Road Bitcoins now, they still have the printing press that they could just easily, buy up the whole market if they want. But of course, they know that once they do that, like it would be the case with the gold market, they would explode the price, and they wouldn't want that, because that would make all the holders of that asset their overlords immediately. And they don't want that, and they're not going to let that happen. So yes, it's going to be they're going to do it. They're going to do something to the effect. And I do understand the debate or the argument that it's going to help repair your balance sheet. And as I showed you, the U.S. is major in need of that repair. We're at 37 trillion in the hole, and really 42 trillion, because only about 900 billion of that is good assets. So that's fine. As far as making it happen in a good way, again, I don't have much faith there. I think it's not going to be done in good faith. I think even if there are people working on the project and really working hard to make it a reality, the United States federal government at this point is just an unbelievable institutionalized beast on its own. Clinton thought he was like God's gift to humanity when he balanced the budget for his second term, just before the year 2000, right? For 4 years, 4 years. And if I've shown you that chart before, right? Of the United States debt, like it was maybe 5-6 trillion at that time. Now it's 35 trillion. Add on the extra 10 trillion in liabilities I just showed you on this balance sheet, or 7 trillion. You're really at $43 trillion. Like it's not going to stop any of the bad behavior of government. The only way that you stop that behavior is by fiscal discipline. It's not by an investment miracle.
Well, interjecting here, what are your thoughts on the tax policy that's been floated? I think Thomas Massey came out, and so essentially lower the income tax, increase tariffs. And the assumption there is if you're going to do that, especially if you're going to increase tariffs, you need to basically decimate the bureaucratic blob that exists within our federal government. Like,
yeah, I thought you were going to ask me about unrealized capital gains tax.
Well, that's from the other side, but let's think positive here. I mean, we can talk about let's definitely touch on that and like why it's so completely idiotic. But in terms of cleaning up the fiscal house, would this tax policy of increasing tariffs, lowering income tax, and then the assumption is if you're going to do that, you have to have a Malay style afuera, the destruction of the managerial class within the federal government.
Yeah. Look, I feel like I tell you this all the time, but I feel like I'm getting too personally invested in my family, too old to like really worry about that too much in an idealistic way. I don't think it's going to happen in a way that you want it to happen, Marty. I don't know. I just don't. I think that realpolitik is going to come in. Democrats are going to say they want, to compromise on this, but then they want to get that. It's the same nonsense as always. The only way to do it, would be after lots of failing, come back and have a, as you said, Malay style sort of epiphany, massively cut the spending and massively reduce the debt as a result of that. But that's just not going to happen in the current state of the United States. I mean, military spending is ramping up. World is, getting uncertain. Promises are going to keep being made. It's not going to happen. You see the slope of the charts there of the debt, the slope of the charts of the treasury. I mean, there's just like, it's a wall that's just growing and growing and growing. And we are not at all, talking about the US now, of course, we're not at all in the state of, multi-generational failed governments like Argentina had. The dollar is still accepted. I showed you the monetary base of all the other currencies falling against a US dollar equivalent, a US dollar valued monetary base. Even though the US is only, 20% of that total, their monetary base, it's still the dollar itself is it's just huge. The network effect is huge, and it's something that they want to protect. So, I just think it's bullshit, man. I think all the talk of it's just bullshit. I think people get excited, they get hyped up over the next election, but I just don't. I don't see it.
I get it. The internal optimist of like, if I'm being realistic and sober, you're right. But man can dream. It would be awesome. Somebody with young children who doesn't want them to grow up in a failed state, like. It would be incredible. And who knows, maybe again, getting idealistic, naive, most definitely, but maybe Trump does they try to fucking kill him. He's bringing in RFK. Had his uncle and father killed by this deep state. Like, man can dream that somebody can get in and have enough of a chip on their shoulder that they're like, fuck it, we're just decimating. Then you have like Chevron deference. That's another thing that got passed this year that many people are sleeping on as well. Like it sort of neuters that bureaucratic state to an extent too. And I think it will take time to see the lawsuits that stem from that ruling that really lay bare that a lot of these alphabet soup agencies actually don't have any control and therefore probably shouldn't have the budgets that they're getting moving forward.
The slow and gradual peeling back of the state is obviously preferred and would be great to see. I've never seen that happen in the real world. Usually it takes some sort of a revolution. And I don't say that as far as like a bloody revolution or anything like this. I'm just saying it takes a major crisis for that to change. And that's actually what Rothbard observed. I've told you that, right? About the, imagine we can get our anarcho-capitalist or libertarian president in. I told you that story, right? Like he used to write this, it's some article way back from like 70s or 80s. And he's like, we all want our guy to come in and be that president who, like Superman comes in on the first day, rips off his shirt, and there's the big A, it's not the S. And he wrote this, and it's like, it's not, he's not our Superman, but he's our anarcho-capitalist. He's our libertarian. He's going to bring everything back to the way we want it to be. But, obviously that's just not going to work here. We have a divided government. We have multiple, checks and balances. The president is just one person. And also these are his words, and I'm paraphrasing. I remember him saying, it's very difficult to expect that on the way up in that journey, you don't get completely corrupted yourself and have, just fall into the same malaise that everybody else does. He made an exception for Ron Paul. So Rothbard was initially against him, but after he saw how unbelievably genuine Ron Paul was and unbelievably rigorous in cutting spending, that he, of course, supported him. But that was the only politician he supported. And then looking at today, I mentioned this too. I think I mentioned this story on one of the shows when Milei came in. I kind of, I'm talking to friends down there. I kind of see Milei that way. I know some people are giving him bad rap and whatever. It's same old business. But I do think Milei has the chops to be that person. I mean, everything he's said or done is definitely in that vein, right? I mean, he's just not trying to have another socialist basket case country like all the politicians have done before him. He really is trying. So that's another one. But man, I mean, they are few and far between. And I don't have much hope for the Trump people either. I think they have sort of different objectives, but I'm willing to be proven wrong there for sure. But I don't have too much hope there. I sure as hell don't have hope for obviously the other side.
Yeah, well, the other side is again pushing unrealized capital gains tax 25%.
Yeah.
Oh, before we get onto that, like I'm sure we've touched on this at some point in the last 5 years that we've been doing the shows, but like, would you say that today the Austrian school of economic thought is stronger than it has ever been in terms of its acceptance, not only in, well, definitely not in mainstream economics, but in the hearts and minds of individuals around the world?
Yeah, I think so. I mean, I think the surprising amount of people in all walks of life that are talking about it. Who was that Brazilian fighter that was mentioning it? You remember him? After fights earlier this year, like that's pretty wild. And you certainly get a lot of grounded sort of. I don't agree with everything some of these people say, but like if you look at say what Joe Rogan is doing, obviously, I mean he's like the white man's Oprah. He's bringing on real mainstream people that are not socially crazy and just want to bring back communism. So that's a very good thing. Then on the other side, you have real problems in some parts of the world with real war and real people that want to destroy your rights, and we've talked about that enough as well. So I don't know. I'm mixed on all of it. I don't I don't necessarily see big changes, but I do agree. And I think it's good that young people today, especially with the tools like Bitcoin and Nostr, that they can just use without permission. You don't need anybody to set up a multi-sig or run relays and stuff and talk to people. I mean, it's amazing. It's amazing to see. And I think that's very compelling and a very good sign.
Yeah. And I think like what you're doing, conversations like this that we have on a quarterly basis, and the plethora of other independent content creators that are out there putting it out, like children's stuff too. Like I think we were talking about it in Riga, Tuttle Twins, the cartoon. Like my boys love it. It's just literally teaching them that Bitcoin is sound money, like why you need sound money, like why like there's like 4 or 5 episodes on like why communism is the worst thing in the world. And you have like these, and again, I'm an eternal optimist and maybe a bit naive, but I do feel like the zeitgeist is shifting in our direction. And a lot of that is a product of the access to quality information that exists today that has not existed historically. Of course, obviously, as we've seen in the last couple of weeks, like the governments that do not want this type of information getting out there are censoring platforms. TikTok here in the United States, Telegram, Pavel, the founder of Telegram, get ganked in France over the weekend. And obviously there's a lot of pressure on platforms like X, which is why it's important that protocols like Nostr exist. But I do think in the digital age, particularly, information wants to be free. And more importantly, like it is free, and it's going to be impossible to stop it from spreading. And I sent out this note on Nostr the other day, but I think that's our job, if anything. And I think you do an incredible job of it because of the data that you bring to the world and to your audience and my audience as well, is that like it helps instill confidence in people. Like part of instilling confidence that we can change these things is equipping people with good data. And that's why I love that we do these shows 4 times a year, because I don't think there's any better data in terms of really painting a picture of the global monetary landscape than the data that you're providing the market right now. And as people become equipped with that knowledge and that data, they have better arguments to make, more confident arguments to make. And you just keep playing that forward and keep chipping away. I mean, shout out to you, 6 years in, going into year 7, like a Herculean effort. I'm sure there's been many quarters where you're like, why the hell am I doing this? Is anybody even getting it? But I can sense it. Like this has become like this recurring conversation that we have every quarter is one of my audience's favorites. Like, I'm not sure if you follow the comments, but every time we put an episode up, people are like, this is my favorite high signal conversation that you have on the show. We just need to keep pushing this forward. Because like you said, like the bureaucratic morass that is the federal government here in the United States and many other governments throughout the world, like they're not going to fix it. And we need to begin instilling confidence in people and then pushing them towards the tool that actually do give them leverage to push back and affect change in the world. Bitcoin and Nostr being 2 of them. Confident people leveraging those tools can bring the bloodless revolution that you alluded to earlier.
I love it, man. You, how much longer you have? You have to run soon, right?
We got 20 minutes.
Good. Well, yeah. Thanks for those words. I appreciate it, man. It's great. It's especially, like I said, inspiring. Come off of the Riga conference, and it's over here, especially in Eastern Europe. Like I said, we are not at all for one moment, jaded or cynical to or disillusioned with, the system, and that we think that, oh yeah, communism is the way to go. Definitely socialism is going to fix us. And unfortunately, there's a lot in the US that think that way. But like you said, I think that by and large, young people know that that's just bullshit. You can't follow those paths. You have to take the right steps for yourself, for your family. And it's incredible. It's incredible that we have Bitcoin to do this, because if we didn't, and I was just showing you these charts, and then we'd have to go back to gold. That's fine too, But going back to gold, like again, you run into the same centralization problems that we were running into with and the whole reason why we got onto the Bretton Woods standard, right, is all the gold went into the United States after World War II because everybody was running from dictators. So that's definitely, that's a lesson that I think people are learning. They know it shouldn't be repeated, and it's awesome. I think it's absolutely awesome where we are right now. So,
well, I mean, let's get on to the unrealized cap gains tax. Like, how idiotic is this? Let's break it down in layman's terms. And we do have recent examples of this. I think Norway tried to do this, but I think in terms of explaining it, you're much better positioned than I am to dive into the economic effects of putting this type of incentive out there in the market.
Yeah, I mean, it's an absolute socialist disaster. Yeah. Spain has done it as well. They have it going. But basically you take a snapshot value of your assets, and that's already problem one, because who's going to define the value? Is your broker going to do it? Is it going to be end of day? Is it going to be how many assets? Is it going to be your property? Is it going to be only stocks? Be this, that. So you take a snapshot value of your assets, say at year one, and then at the end of that year, take a snapshot value of the assets again, and the difference of that would be the gain, tax the unrealized gain, because of course you haven't sold some of it. You sold some maybe, which is also taxed, but then they'll tax the unrealized gain. It just becomes an accounting nightmare, as if the system was already not an accounting nightmare. I mean, like I file my taxes to the U.S. Living abroad, and it's not a fun process, and this would just be more insane. Spain has a shortcut already around, which I think will show everybody how just insane this is they have something called the 60% rule in Spain. And so in Spain, if you have unrealized gains or wealth, and in Spain, it's even actually a wealth tax. It's not an unrealized gain. So in Spain, it's a much lower number. 25% is obviously a huge number, and that's a huge number on an unrealized gain. In Spain, they have, and it's different by region, but they have these small percentages, and it's confusing. It's different by region, like I said, like 0.1%, 0.08%, 0.2%. And that's a snapshot on the value every year. And that's a wealth tax, straight up wealth. Also insane way to do it. The percentages are different, but what Spain's the amount of wealth that they're trying to, it's a worldwide tax, right? So wherever you live, doesn't matter if you have houses outside of Spain. If you're domiciled in Spain, you have to pay it, except outside of Madrid, I think, which is obviously a big reason why a lot of people domicile in Madrid. But if you live in any of the, the beautiful coasts Spain has, you got to pay it. And, but they have all these workarounds. Like if your income, your regular income, that is, from your job, or it includes your dividends from your investments, if the regular tax that you have to pay from all the rest of the tax code is, you find that, you pay the tax, right? And then you look at the wealth tax at the next step. And if the wealth tax is an amount that is larger than 60% of your income, your regular income that I just talked about, then you only have to pay 60% of your income. So that right there is already, the Spaniards got out of it, like in a real way, right? So I'm not saying it's it's great to have loopholes. You got to have loopholes in these insane tax systems, but it's already the case in Spain that you'll never pay more than 100% of your income on tax, of your regular income, of your real income, where you're actually having real cash. So that's what Spain did.
But 60% of your income is insane.
It is insane. I'm not saying it's a good thing. I'm just saying, understand that is immediately going to happen in the US. There's going to be some loophole that they're like, we can't, what if, and there's all sorts of crazy scenarios, right? Because this is above people for 100 million and above, right? Like what if Bill Gates has just a huge year, and then he has to sell 10% of his stock to pay the tax, and then, tens of millions of people own Microsoft stock, and their value is going to be affected. But was their value affected before the capital gain unrealized capital gain calculation was made for the prior year, right? So they don't have any money to sell the stock because Bill Gates just rugged them. I mean, it's insane on there's so many knock-on cascading effects that you have to do with such an insane policy, which is probably unconstitutional anyway. I don't see it ever happening. I'm not saying they won't try, but you see even just what Spain tried to do. They had this thing that's called the 60% rule, massively corrupt, I'm sure, massively problematic. You'd have something like that would happen if it happened in the US. But anyway, it's not going to happen, in my opinion. There's just no way. You can have as many trillions of dollars as national debt as you want. There's no way that you're going to convince even people downstream from the 100 millionaire folks that when they got to pay the piper, that's going to affect your asset value as well. And what if you got to sell stock from the prior year's unrealized gain, and now you can't because they just rugged you by selling before you? It's a nightmare.
Well, and that's the other thing too, is like even the $100 million threshold. It's like these people got rich for a reason, and most of them for a reason, and one of those reasons being that they're pretty smart, and so like they're just going to game the system and just move all those assets offshore, 100%. And then you're just going to have to move this right. Oh, it's not 100 million, it's 50 million now, and then people with $50 million are pretty smart as well, and it's just going to trickle down until you're covertly confiscating like paychecks from janitors at some point.
Yeah, communism, future of communism, right there. I that's the United States is too strong for that. There's no way we're gonna let that happen.
Well, I mean, like another communist policy that's being floated around is like the price caps because of price gouging as well. Like these people are overtly and I threw out. Like I wrote about this in the newsletter and joked about it in a tweet, but like I think we need some form of the Red Scare back, where we need to like overtly ridicule these overt socialist, Marxist, whatever you want to call them, communists. I know there's semantics arguments about the differences between those three definitions, but they all mean the same to me at the end of the day. They all lead to the same outcome. Like we need to like just call these people out and say, ridicule them and ostracize them as vehemently as possible, because this would lead to the destruction of quality of life and the economy overall if any of these policies get through. And that's you say they won't get through, but that's the sad part about the state of America as an American citizen. Like most people are dumb. They don't understand any of this stuff, which again, going back to what I said earlier, why it's important we have conversations like this. You get your data out there, but most people, whether we like it or not, do not understand the intricacies of any of this.
Blacklisted by History. You know that book?
I do not.
Blacklisted by History. All of your freaks should be reading that. It's actually about the real story of McCarthy and how he struggled later on in life, but really his cause was pretty noble at the beginning. What they were doing was, at the end of the day, they're trying to understand if you are, this is back to the Red Scare, obviously. If you are actually trying to subvert the United States and its laws for the preference of another government, that's what they were trying to do. And they got started in, it might have been a hodgepodge way. He might have been, harsh with some people, but the way that they portrayed him, actually, United States sort of lore that like, where's everybody, communists are really nice people. They want the best for us. They're not gonna harm us. They want the best for our policies. This was kind of the conclusion of the McCarthy era. It's actually not true at all, and nor does the intelligence agencies. I'm not saying to defend all the things that they do, not at all, as you know, but to just sit there and think that, communist Soviet Union and now mafia state Russia or communist China has the best interest at heart and is not going to try to subvert U.S. democracy, that's absolutely naive. And McCarthy was actually on the right track. And read that book, and you'll see that his legacy there has been completely whitewashed, unfortunately.
No,
we're going to have to learn again.
No, and it was McCarthy, and then Yuri Bezmenov came in the 80s, and he was ringing the alarm bell, and he literally laid out the playbook of the color revolution.
Useful idiots.
Yeah.
I think he was the one that brought useful idiots to the English language.
Yeah. And that's somebody who escaped communist Russia and came over here. It was like, hey, here's what you need to look out for. They are going to try to subvert, whether it's Russia, China, whoever it may be. Like, they want to undermine the stability of the United States, and they will do these subversion techniques. They'll start with the universities. They'll leverage the useful idiots. They'll cater to feels and emotions and act like they're good people. But at the end of the day, they have a multi-decade process by which they undermine institutions and then begin to push these Marxist, socialist, communist policies through. And you wake up one day in a country that is not what it's supposed to be.
Yeah. I know you always give me, you don't like when I say it, but this is where I'm saying that you guys are so much better set up back home in the States compared to like Europe right now. I mean, look what Europe's doing with the pants down, with the aggression that Russia's doing, and all that Europe can respond to with any of these sort of, whether it's Telegram issue or whatever, they just, Europe or Bitcoin, Europe is supposed to be just the best regulator in the world. Like, that's what Europe is hanging their hat on. We're going to be the best regulator. It's an insane way to run a society. And thankfully, the United States doesn't have that. And I think the United States is still going to be set up much better than that. Again, fiscal policies, government policies, a whole different thing. And we are careening down a bad path there, as we talked about. But I still think that the U.S. is way better set up. I mean, militarily, structurally, spending-wise, demographically, as our friend Peter Zion, who thought Bitcoin was $16,000 overvalued when it was priced at $15,000. At least on that part, I do agree with him that the United States is still set up demographically so much better than other parts of the world.
Most importantly, the Second Amendment. Like, you look at what's going on in Europe, Australia, other parts of the world where you have this chaotic dystopian government coming down. Like, and that's the other thing. They want to take our guns. The Democrats do. Kamala Harris is saying it explicitly now. And that is literally the hill that we should die on as Americans. That, like you said earlier, you never want revolutions to get kinetic and draw blood, but you always need that sort of that nuclear option, if you will, in terms of the Second Amendment and the right to bear arms here in the United States to fight back against these forces. God forbid it ever gets to that point, but you're going to want that Second Amendment if it ever does. And I'm a peaceful man. I'm an anti-war guy. I don't ever want to see it get to that. I think we can have a peaceful revolution by winning hearts and minds of people. But I mean, history has proven, ancient history, recent history has proven that once you disarm the populace, it's really trivial for a despotic government to put in speech laws and throw people. Like, look what's going on in the UK. They can't even express their disdain with immigration policy without getting thrown in jail. That's insane.
Yeah, they are example number one, and we'll see how that's again a good way or a good example, I guess, to see that Europe is a lens to the future of America. I always say that, right? So, like, I've been here a long time, almost 20 years, and we have shitty cars, no parking, way too many regulations. Europe is just a lens to America, and specifically Western Europe. Eastern Europe's much better, but of course we have to worry about real security with Russia. But what happens in the UK in particular is very interesting right now, specifically if they're going to repeal these laws, because I know they're trying to. Certain members of the right are trying to make that happen, and they're going to have to. I mean, you just can't jail someone for their opinion. It's just insane, as everybody knows. But Europe is a real lens to the future, and I think America just has to keep looking at that, eye on the prize, and say that is not what whatever paradise Europe is going for. That's not what we want. And I think you guys will get there. I know it's a different view than sometimes you worry about, but I got more faith in the States than
I do as well. I've become much more white pilled this year. I'm done doomer because there's no solutions in black pills and doomerism. It's like we have.
Well, you do have Bitcoin. You do have Bitcoin.
Yes.
Like I said, I mean, I'm still not, perhaps not as optimistic as you are with the fiscal stuff. I think there's going to have some weird stuff happening there before it changes. But end of the day, you have to stop spending. I mean, that's what you have to do. And I find the government stopping spending about as likely as the government reforming the tax code to get to one page, which the tax code should be in one page, right? It should be as simple as one page. It's not. Everybody's vested. Everybody's lobbying. There's just so much nonsense. And at some point that has to break. That's where I'm not sure where the optimistic side, how quickly that can come, if it comes. But as we always say, man, I mean, we got the escape hatch of Bitcoin. So it's amazing that we have that.
It really is. It's a perfect it's a perfect place to tie the knot on this conversation, because I got to run here. We've got Rabbit Hole Recap. If you're watching live, we'll be live again in about 15 minutes. Anything else you think we should send the freaks away with, Matthew?
Yeah, buddy. No, just enjoy the recap. Great seeing you again in Riga, as always. Glad you made it over here. We're going to make it. We're going to win. It's all going to be good. Stay humble, as you say. Stack those sats. And if you want some real data, at One Base Money on all the platforms. I'm gonna start doing the long forms on Nostr there. I think that's in the good spirit. I'm starting my 7th year off there, and I'm gonna continue there. So please follow there if you can.
At One Base Money on Nostr.
At One Base Money, you'll find me. Yep.
Yeah. All right. It's always a pleasure, sir. It was great seeing you, and we'll be back beginning of next year to do our Q4.
Actually, Q3 is
Q3. Yeah. No, we've got one more this year.
This is a late month already. Hopefully by November we'll be doing again. So December latest. Yeah,
we'll be back in a couple months. Enjoy your evening in Latvia, sir.
Thanks, brother. Good weekend.
You too.
See you, buddy.
Peace and love, freaks.
Bye.